Chip stocks grabbing center stage as Nvidia reported their earnings this week. Also, semiconductor stocks at the center of the China and United States trade negotiations. What will happen over the weekend, and what news broke late today that will impact all of the semiconductor stocks, including Nvidia? We have Tesla seeing its sales decline rapidly in Europe, but they are just weeks away from launching a Robotaxi here in the United States in Austin, Texas. Will that skyrocket shares of Tesla even further? We'll discuss that and more on today's video. What is going on, investors? Hopefully you guys are doing well out there. We're going to kick things off like we always do with Meta Platforms. Start of the week at 634. This one blasting off more than the rest of these stocks, up 2%. Finished the week at 647. Meta, just a couple of years saying that the metaverse was going to take over and we were going to live in a virtual world with virtual ski goggles on our face 24 hours a day, 7 days a week. Well, they've U-turned and they've pivoted back into traditional retail. In fact, Meta is expanding their retail store footprint. We'll get to a story later with Amazon. Looks like they're going in that direction as well, as retail and devices are going to take off. That is becoming a bigger story as AI software continues to evolve. We had last week Johnny Ive partner with OpenAI. That is going to bring a lot of attention, a lot of money, a lot of funding, a lot of new devices coming on the market, and Meta wants to be a part of that. Now, really interesting though here as it relates to their investments in AR and XR and VR and all those types of things. Meta is partnering with Anduril for XR Army headsets. If you weren't aware, this man on the left is named Palmer Luckey. He actually founded Oculus with Mark Zuckerberg, actually bought from him many years ago. The two are getting back together in a bromance, so to speak. Where's Mark's chain? Anytime we talk about Meta, we got to dangle it just a little bit. Mark not rocking the chain, but he is now rocking government contracts or partnering with a company that relies exclusively on that. We'll see if this takes XR and VR into a new direction as the consumer devices from the Vision Pro, even the Oculus, have more or less flopped from a sales perspective. And when we're talking about trillion-dollar companies, you really have to have a lot of sales. So the devices are relatively popular, but in the context of a multi-trillion-dollar company, they're not. But our government contracts where you're outfitting the great United States Army, well, that could bring some real revenue. Now, Germany is seeing revenue. They're seeing dollar signs, and they're thinking about doing a 10% tax on internet giants like Google and Meta, with a politician in the country saying, on one hand, these corporations do billions of dollars of business with high margins, and they profit enormously off our country's media and cultural output as well as its infrastructure. But they pay hardly any taxes, invest too little, and give too little back to society. I thought he was talking about politicians there, but he was actually allegedly talking about these big tech companies, which have a lot of advertisements from small businesses, which collect taxes, invest a lot in the local economies, and probably give back as well. These are platform companies, and many of Germany's small businesses benefit from that. And so elections matter, and so do the technicals. Equity Empire has a brand new technical analysis YouTube channel. John McHugh is busting out on YouTube, and folks, he is given the gold. I have been on here. I traded GameStop. I traded a handful of other stocks, Tesla, Dollar General, CyberArk, Palantir. Virtually on a daily basis, you are getting technical analysis from Equity Empire's John McHugh. I'll have a link down in the description below to his YouTube channel. Check it out if you like trading. Moving on to Apple, start of the week at 198, was drifting lower, and then kind of the back half of the trade today got it all back and more, up 1.36%, as you had that minor delay in tariffs, as there was a court ruling saying that the tariffs that the president administration put on back in April actually are null and void. Those are still in place, but more legal challenges coming obviously would benefit Apple, particularly if the president decides to slap special tariffs on the smartphones. Now, Really good news for Apple here is they took the top spot in global smartphone market in Q1. This was after 2 years of not holding the crown. Also, when you look inside of China, there has been a very steady decline in Apple iPhone sales in the country, with many consumers there favoring domestic providers as it relates to the higher end or even mid to high end smartphones. Apple's sales inside of China appear at the moment to potentially be bottoming and maybe making a rebound. That is good. The App Store also really good at just attracting lots of money, as it nearly triples its billings, which is the money that it takes in just 5 years. This obviously comes under threat a little bit as you had that ruling fall down maybe about 2 weeks ago as it relates to Fortnite and Epic Games, in terms of what Apple can and can't do, or can and can't prevent app makers, game makers, apps like Spotify, Netflix from allowing separate payment portals inside of the app, whereas before they only could offer payment options exclusive to Apple, where Apple is taking a 30% tax. Some minor housekeeping here, as Apple plans to rebrand its operating systems, very similar to how like maybe Madden or NCAA football kind of does their games. Instead of iOS 18, which means almost nothing to anything other than like a software or computer geek, they're going to rename it iOS 26, which I would assume is for the upcoming year. Now, they are also expanding their self-service repair. If you did not know, Apple did not want to do this, but I believe this is also a court ruling that is requiring the company to do this. This dates back maybe a handful of years ago, but you are now allowed to self-service your own phones in terms of batteries and screens, and the company offers different types of parts. Now, they are also going to be launching their own dedicated gaming app. I'm not sure how this is different than the arcade app that they already offer. If you have a subscription to Apple One, which I think gives you access to news and TV and iCloud Drive and those types of things, I think it's maybe $30, $35 a month. Well, you get access to this arcade app. And so I don't know how this gaming app is different. Maybe it's for harder quarter games, but what it's interesting is Apple is trying to obviously maintain a leadership position in gaming from a distribution standpoint, since they are going to make this a default option. So when you download or when you have your phone and you buy it, this is going to be on there already. And then obviously encouraging game makers to continue to funnel their games through their platform so they can collect fees on all the different transactions. Moving on to Amazon. Start of the week at 203. Certainly will benefit if those tariffs are ruled illegal or we get further negotiations that are going forward. Amazon up over a point to finish the week at 205. Now, just like Meta, just like OpenAI and Johnny Ive, you have Amazon also focusing on what they are calling breakthrough consumer products. Now, Amazon has had some success here. The Kindle and some other things. Now, they've had some flops as well, including a tablet, I believe a phone at one time. They do have some Fire TV streaming products, and they have the wildly profitable or wildly popular Alexa devices. So Amazon also trying to focus on consumer devices. That'll become a big story also when we move into the kind of the robotics age. That is probably coming later this year and into 2026. We'll discuss that a little bit when we get to Tesla. That will all just spur all types of devices that people will likely buy. Now, Talkspace, which is a publicly traded stock, it's a penny stock under about $4 per share. It rose on a deal earlier this week with Amazon Pharmacy, which Amazon provides to fulfill prescriptions for people, obviously competing with the CVS's and the like. The New York Times is finding that AI companies are willing to partner with them and license their content, as an AI licensing deal was signed with Amazon. I get asked a lot from like students and people kind of getting into careers. There's this belief that writing and producing content in the age of AI might actually become less valuable because the AI systems themselves create content. I would say, no, I actually think it's going to become more valuable. If you're producing content, there's a lot of companies out there that want to access it for their AI models. Moving on to Netflix, start of the week at 1,197. And after my sons confidently bought shares of Netflix just continue to churn higher, up over $1,200 per share. In fact, I think they hit a new fresh 52-week high this week at over $12.15. The co-founder of Netflix joins Anthropic's board of directors. What will be interesting to see with Netflix going forward in the age of AI, you're going to get a lot of developments as it relates to AI and video. Right now, it's only capable from a compute standpoint to produce relatively short clips of video. But in the future, you're going to get these very much long form videos produced by AI. There are some companies that introduce this or have this, but it's not mainstream quite yet. But with the introduction of Blackwell, which we'll talk about here in a minute when we get to Nvidia, and more compute getting built out, more instead of using text and maybe even a little bit of image, there'll be more and more video created with AI, and we'll see how Netflix capitalizes on that. Partnering or understanding what's going on in Anthropic's probably a good thing. Now, who's next to join the $1 trillion club? You have Walmart, JP Morgan, Visa, Eli Lilly, and then potentially Netflix. Maybe what my son saw is you have a $500 billion company with a long runway and a very sticky business. And maybe in 10 to 15 years, Netflix stocks comfortably doubles. And that would be a solid return. Speaking of solid returns, Nvidia started the week at 133, popped on those earnings all the way back up to 142, but got rejected there at a pretty logical technical area. Finished the week roughly flat or just up about 1%, finished the week at 135. I did a live stream on the night that Nvidia reported earnings. Make sure you head on over to the Equity Empire channel and watch the live thing. The first hour or so is primarily Nvidia. The last hour maybe is more question and answer. We talked in depth about Nvidia, and I will be going live again next week when Broadcom reports their earnings. I believe those are on Thursday. Now, the company reported earnings, $44 billion, would have been dramatically higher if they had access to the Chinese market. In fact, the next quarter would have been about $8 billion higher. Nvidia estimating that the China market is worth $40 billion to the company. So it's amazing that the company literally had its number 2 market and $40 billion of revenue stripped away from it, and the stock didn't completely collapse. That is just showing you the demand that the company has for its products, with revenue up over 69% year over year. The gross margins are still in the low 70s, and they'll likely expand a little bit as we move into the back half of the year. That is because the Blackwell ramp is going particularly well for Nvidia, and it contributed to nearly 70% of the data center compute revenue in the most recent quarter, as the transition away from the previous generation Hopper is more or less complete. You also have the Blackwell ramp, where average hyperscalers are averaging 72,000 of these bad boy GPUs per week, and with further outputs later this quarter. So it's going to show you the advancements in AI are going to rapidly accelerate as we move into the summertime, particularly the fall and winter. You are going to see massive leaps in anybody that has access to this. That is because the Blackwell system is some 40 times higher speeds and higher throughput than Hopper. This is a massive upgrade, and we are getting massive quantities of these being installed. And so we are going to see some massive improvements as it relates to AI. It'll take a while. These companies have to run training models for probably a week or several weeks or months. They have to get these things installed. The good news about Blackwell is the next generation is not necessarily this massive upgrade. Hopper to Blackwell was a big upgrade, not just from the architecture that Nvidia had to do and partner with TSM and all the co-packaging and all the stuff that went into the computer chip, but also from a cooling perspective. You went from data centers that was cooled via air to now liquid cool directly on the rack. And so data center providers, the Amazons, the Googles, the Microsofts, and CoreWeaves and all those companies, they had to reconfigure their entire data centers. The next GB300 system has some upgrades, but it's not massive upgrades. And so those will be able to slip right in. And the companies that have already started to make the changes will see that. Now, the company talked extensively about China, and their outlook reflects a complete loss of the H20, which was a custom chip that Nvidia made for the country. They lost $8 billion of revenue. The argument that Nvidia is making is that AI moves on in China with or without them, and the United States has a decision. Can you isolate China enough that they'll want to come to the table and negotiate other things that they want you to? There were headlines that crossed today that appears that China is already crying uncle and wants access to these chips. That is because the Huawei chips are good, but they're not made in the quantities that they need, and Nvidia's are at least 2 years ahead of them. Nvidia obviously making their case for access to the Chinese market, and this will be a big story as we move in the next couple of weeks, even this weekend, potentially with President Trump saying that he might have a conversation with President Xi. If Nvidia is given access to the Chinese market, it's probably great for Nvidia, but it's even better for a lot of other semiconductor stocks, as Nvidia has enough demand and its share price can support not the Chinese market, but stocks like AMD and many, many others would skyrocket on that market being opened up. Jensen Huang is saying that the AI sector is rapidly advancing without United States technology inside of China. That is because the country obviously has a vast amount of resources, but also a lot of engineering talent. So Chinese will catch up a little bit to Nvidia. Right now, their chips are certainly a generation, potentially 2 generations behind, but they will catch up. It's just a matter of when. So Jensen Huang's argument is we should have them building on America's stack, and obviously his company would vastly benefit that. The Chinese embassy is even calling on the United States to end the semiconductor export controls. This is a nod that yes, China does have some aspects of semiconductor design that they're doing well, but they are still massively behind Nvidia. And with access to that, they will be able to maintain a leadership position. Without access to it, and I just showed you, Blackwell is 40 times more capable. The other thing that is happening is countries like the Middle East, we'll see this weekend with Europe, and virtually every country other than China, Russia, and rogue nations are going to get access to the cutting edge Nvidia chips, likely at high quantities. So what that could potentially do is actually put China, Russia, and other countries on an island where they have to fund and they have to compete against the best. They don't necessarily want to do this. This is a developing story, and it's anyone's guess. It's anyone's guess how this works out. The tensions being ratcheted up as President Trump says China has totally violated the talks that they had just a couple of weeks ago in beautiful Geneva, saying on his social media site that there's no more being Mr. Nice Guy. He tended to walk back those comments late today in an Oval Office meeting. We'll see over the weekend how this plays out, but my gosh, it's a fluid situation, and semiconductors are at the middle of it all. Now, moving on to Google, start of the week at 175, up, down, up, down. Sorry, that was actually a year price range. We actually started the week at 170 on Google, and it was basically flat. Shares up about 0.5%, finished the week at 171. What you are going to see if China does not get access to Blackwell systems, DeepSeek will not be able to compete. The models that have access to a chip that is 40 times faster than the previous generation, those are going to take a giant leap forward. And just on the current generation that they have access to, they can near the performance of OpenAI, Google, but just give OpenAI and Google and Anthropic and just Grok or any of these other companies just a couple of more months, and their models will take a giant leap forward. That is what China understands what will happen. And again, semiconductors at the center of trade negotiations between the two countries. Now, move on to Microsoft. Start of the week at 457, up 0.6% to finish the week at 460. We'll see this one technically. That's the all-time high, or virtually the all-time high on Microsoft. Will it get rejected? Will it break higher? Who knows? Some of it hinges on Copilot, which Salesforce CEO Mark Benioff was talking a bunch of crap on the conference call. But Copilot landing a big deal this week with Barclays, not disclosing the number of seats or the terms of the deal, but plenty of people are using Copilot. But there are plenty of use cases for Salesforce, ServiceNow, and plenty of other enterprise software makers. Elon Musk does not like Sam Altman. He hates OpenAI, a company he helped found, And he makes no secret about it, as he threatened to scuttle a OpenAI United Arab Emirates data center deal. But the UAE is smart. They know how to play all sides, and they're going to get that money. The CFO of OpenAI says that their public benefit corporate structure will pave the way for potential IPO. When that will come, if it comes, who knows? My guess is the company will have to come public sooner rather than later, only because they have a lot of well-funded competition coming from other companies. And obviously, the way you maintain a leadership position in AI is you got to spend billions and billions of dollars. This says OpenAI is setting its sights on South Korea to propel further growth as AI is truly starting to go global. Moving on to Tesla. Start of the week at 353, and we flick the gear stick up and we go in reverse with Tesla. Down 2%, finished week at 346, but still over the past month, you're doing pretty good, up 27%. Tesla is struggling in Europe, as clearly there's brand deterioration there. That is because EVs in the region grew 34% year over year. Meanwhile, Tesla sales declined 49% year over year. If EVs weren't selling, then you could say this was a broader EV problem. No, Tesla has a Europe problem, and so they would be wise to find somebody in the region or find a group of people to run some kind of marketing campaign. Elon Musk is great at building companies. He's even great at building brands, but is he great at rebuilding a brand? And that is what Tesla needs in some of these regions. I don't necessarily think you need it in a big way here in America. EVs just simply aren't that popular unless you live here in California or some sunshine states. But clearly Europe was turned off by whatever Elon Musk has done, whether it's politics or anything else. And so you need somebody in that country running advertisements, running social media campaigns, running endorsements, running different types of things. That is what's needed here. I don't know if Elon Musk is capable of it. That's with no due respect to what he's accomplished, but I've never seen him rebuild a brand. And that is what you need to do with Tesla. The more you sit on the sidelines here, the more the sales will likely struggle, as they are not struggling launching their Robotaxi service. June 12th, folks, we are just a couple of weeks away. In fact, just over a week away from the launch of Robotaxi service in Austin, Texas. This will come with a lot of fanfare of just 20 Model Y vehicles. In fact, 10 to 20 of them. There'll be a ton of attention on social media platforms, particularly X. There'll be financial institutions and financial media covering every single mile that these 10 to 20 Model Ys make. Any disruption, any accident, hopefully nothing tragic, will be covered to the nth degree. But if all goes well for Tesla, they are fully capable of scaling this up very, very rapidly. Obviously, Tesla or Austin, Texas is just one small metropolitan area. And I say that with all due respect. I'm out here in California, where you have cities like Los Angeles and San Francisco, which are a much broader market and already have Waymo cars driving around them, particularly in San Francisco, bumper to bumper. If it goes smoothly for Tesla, this could be a brand new revenue source and something that the haters just won't be able to handle. As the AV race heats up, that is going to be putting pressure on the incumbents like Uber and Lyft. Already, Waymo having the market share of Lyft inside of the city of San Francisco, and they can't go to the airport and they can't go to the South or East Bay. Those markets continue to open up, and the only thing saving Uber and Lyft, ironically, is government regulation. Government regulation actually held Uber and Lyft back in the early days as they tried to protect the taxi industry. Now that same regulating body is trying to protect them from AVs, because you have car registration, you have car insurance, you have car dealerships, which have huge influence and huge tax revenues for municipalities. With AVs, some of that potentially goes away. Also, a lot of Uber and Lyft drivers will lose revenue and their jobs. But this is what's coming, and Uber and Lyft will have to adjust. My view is that Uber's business, when you look at it financially, looks absolutely fantastic. And that is the very single moment when a business gets disrupted. Businesses don't get disrupted when they're flat on their ass. Businesses get disrupted when they are at the peak of their powers. Go look at BlackBerry. Go look at Blockbuster. Go look at any business like Sears that gets completely disrupted. Before they get disrupted, their financials, their stock price, everything about the company looks absolutely perfect. That is why they are absolutely ripe for disruptions. AVs are going to decimate the demand for these companies and decimate the value of their stock prices. xAI is striking a deal to integrate Grok with Telegram. It looks like the Telegram executive got a little out over his skis on this one, announcing the deal before the ink was dry. But we'd assume that potentially xAI coming to another social platform. Neuralink, the brain implant company run by Elon Musk, raised $600 million at a $9 billion valuation. And Elon Musk is exiting Doge as he realizes Washington is full of snakes and a swamp, and a big, beautiful tax bill will do nothing to cut government spending. Got to give props for Elon Musk for at least trying something that many have tried before. And while he was unsuccessful, if you had term limits and maybe even an age limit, this is something that will be addressed. But while you don't have that in Congress, neither party has any incentive to cut spending. Moving on to the technical segment of the show. We are just hanging out on the S&P 500. You're over the middle of the channel. You're just a stone's throw away from the all-time highs at about 6,200. A break lower would signal a buy. A break higher is likely what you're expecting. Meta looking very much like the S&P 500, just floating out in the middle of a channel. All-time highs back up here at 770. The thing is the next month that we're moving into June. It's not an earnings month. You will have some like Broadcom and a handful of other companies, but it's not a big earnings month. And what you have, though, is positioning for July, as people don't want to be caught off sides, either long or short companies heading into earnings, with the tariffs, while still a story, not having really any impact on pricing or demand for the most part. These companies probably going to have a fantastic quarter. Apple, a little bit more exposed to the tariff drama, sitting right here at the bottom of the channel, which has been a buying opportunity for the past 5 years. Amazon sitting up above an area of support at 192, all-time highs back up at 250. Netflix sitting at the top of the channel and continuing to work its way higher. Anti-gravity shoes on Netflix. That looks absolutely spectacular. Dips in that one should be bought. Nvidia moving up against resistance at about 150, 153. Pullbacks in this company should be aggressively bought. There's areas of support back at 114. A break to new highs. You would then buy the back test to 150. Google, essentially at the middle of a channel, still making a beautiful series of higher highs, higher lows. Google looking absolutely fantastic technically. Microsoft, after they reported earnings, gapped up and now has retested the highs. You are likely to get rejected here. Rejections back to 400 should be bought. A break higher will take shares into a new stratosphere, and then a back test to the top of the channel, which is right around 460, should be bought. And then finally, you have Tesla, which is also, like a lot of these stocks, just sitting just above the middle of the channel. You're looking for that Robotaxi to go very smoothly. Hopefully, knock on wood, cross your fingers, hope nobody dies. I mean that seriously. Hopefully it all goes well. Autonomous vehicles certainly safer than humans, but from a press perspective would be bad if there was any type of serious malfunctions there for Tesla. It would also be a setback from getting approval into much bigger markets here in California. All-time highs with Tesla back up at 490 as we move into the back half of the year. They'll have an Optimus robot event. I would assume it's probably an October or November timeframe where it's doing useful things on the showroom floors or the factory floors of Tesla. That'll be the next pump if these robotaxis don't already shoot you back. So FAANG moving back to all-time highs. Markets moving back to all-time highs. We'll see if they get there in the month of June, but we're closing the book on a great month of May, where you had stocks really rally from the troubles that occurred in April. Hopefully you guys have a safe weekend and a fun weekend. And if you're a parent like me, it's probably the start of summertime. So enjoy the time with your children and your family. And I'll be back next week. Have a safe weekend and a fun one. And good luck with your investments.